Hey everyone, it's Paul, and Ian has invited me on to the Iancast again. Thanks for having me on, Ian. And we've got a ton of stuff going on, a ton of stuff going on. And I wore my special Tesla hoodie
Yeah, that's awesome.
because
Thanks for
you
that.
saw what happened yesterday, right?
Yeah, it's awesome. The
Yeah.
all the reactions and everything, people still are shocked that Tesla is still going up. And their earnings report was pretty amazing. They had more sales than expected. They had a lot more profits than expected. They brought in $1 billion in cash, which now they have the highest amount of cash they've ever had. They said they can sustain themselves on the cash that they're bringing in rather than looking for outside investors, which completely negates the whole bankruptcy argument that people have been saying for like years now.
It's insane. I mean, and you told me, it's like, hey, Paul, go check out what they're saying on CNBC. So I did.
Yeah,
And these people are clearly short. There's no other
yeah,
way they had that reaction, and they're like, "Oh, he should raise money." I was like, "Why? To bail out you on the short?"
yeah, right. Yeah, it's like 20% short interest still on Tesla. A lot of people are still short.
You
So
know,
that
like
just
we've
whole
discussed
number
this on
go
the
up.
Iancast, which is like in my 20 plus years, I have never seen $100 billion or even a $50 billion company with 20-30% short interest. I have
Yeah,
never seen that.
right,
It's like a
right.
mania.
It is. Yeah, people love to hate them, and now the stock has gone up like triple since I think June. So 7 months has gone up 200%.
Yeah, I mean, and at 180, and I had friends, texting me, it's like, hey, Paul, what about Tesla? It's going to go to zero. I was like, you're crazy. I mean,
Yeah,
this is a real company. They make products that people love. It's a brand that's beloved around the world. Like, what are you talking about?
yeah, yeah. They I think they have like a 10%, like 9.5, 10% market share of every single electric vehicle that's been sold all over the world has been a Tesla. Most of them are Model 3s, so they're doing that with just one car. Plus, they have
And
their whole solar business.
yeah, which I mean, in 2018, I got a lot of grief from people in Profits Unlimited. Tells like Paul Tesla is down, and I put it in. I forget the original price that I put it in at, and then I sold it out when it started to go down. Post like that, that infamous tweet from Elon, and then I put
Yeah,
it back because I went and looked at it, Ian, and I was like, they are going to have margins that could be as high as 10 times what GM and Ford have at their peak.
right,
So
right.
they're going to have like 20 to 30% net margins,
Yep.
because their costs are so much less than putting together the, I don't know, 10,000 parts that go into an internal combustion engine.
Yeah, yeah, way less. It's way simpler, way cheaper to make. And Ark Invest, as we've talked about before, they're the ones that had that $4,000 price target like years ago. Everybody thought they were insane, and now the stock is at over $600 a share. And they point out a lot of really good things in their research with Tesla. One of them being they're not a regular car company, and people want to value them like that. And now they're like, oh, Tesla is more than GM and Ford combined. It's ridiculous. But the fact is, like you said, it's way cheaper to make these cars. Plus, they have the solar business, which is very high margin, very, very profitable business for them too.
Well, that was part of the big short thesis that, oh my God, Paul. And I have a friend who's like, oh, Solar City, did you see what
Yeah,
they did? I was like, yeah, and I see what they did. They levered up their balance sheet to buy it in. And I get that. And at that moment in time, was it particularly convenient for Elon and Tesla to do that? No, it was not. However, it is a real business, and we are invested in a ton of this ecosystem, solar power, all the various. So we know that the growth there is enormous.
right. Yeah, it's huge.
Enormous. It's huge. It's absolutely huge. And so I remember going in 2018, 2019 saying, hey, buy some. And my guess is that we actually have some Profits Unlimited subscribers that actually bottom tick this, that
Yeah,
have Tesla at 180. I know for a fact that people have written in, is like, I've got some at 200. We've got folks that are in at 250. And my official price in Profits Unlimited, I believe, is 350. We sat through a pretty significant decline. However, I never doubted it. And I kept going on week after week on my updates on Profits Unlimited. And it's like, hey, I'm telling you, look at the Model 3 and look at how it's selling. They have more demand than they can actually supply people. And
Yep.
it's just a matter really of like putting the capacity up and as they do that, the price will decline. And with that, all of that latent demand, I can tell you there's so many people that would love to drive a Model 3.
For
And
sure.
that's now, when the Model Y comes out, it will be the same thing. People are like, oh, I can't wait to get into a Model Y.
Yeah, because people love SUVs, but the problem is the gas mileage is bad, and they're usually pretty expensive compared to a car. But the Model Y is really not that badly priced when you look at other SUVs. Of course, it's electric, so it has a bigger range than a lot of the SUVs out there. And plus, in the United States, at least, people love SUVs. They're more popular than sedans. So that's just another market that they're going to dominate. Plus, they have all of China that they're beginning to supply now. So it's early stages for that. So between the Model 3 and the Model Y, they're going to just completely keep growing at an exponential rate for the next couple of years at least.
And they're going to devastate pretty much. I've looked through the car industry, Ian, because the car industry folks are like, oh, competition is coming. Competition is coming.
Right.
And
Yeah.
in truth, none of these companies are actually genuinely serious about actually making an EV. Because they make all their money from something else. And they have to
Yeah.
carry that infrastructure, carry all of that capacity, and then all the liabilities associated with that, pensions, but it's built up over 50 years. They can't like just like let that go. I mean, they've got to continue to keep producing ICE vehicles to keep going. So that just allows Tesla a longer and longer lead.
Right. Exactly.
Yeah. I mean, and then Elon, I mean, I read snippets of the call, which was also pretty amusing. So,
Yeah.
the shorts want him to raise capital because to
Yeah.
get them out, because they want to cover, but there's no stock in the market.
Right.
And so they're like, wouldn't you want to raise money to make acquisitions? And Elon's like what? Who would you have us buy?
Yeah. Yeah. And he also said that the retail investors were more informed and they knew the company better than the analysts,
That's
which was
right.
also
And
funny.
yeah, I mean, and that's true for like a lot of things to today, which is that, people pay attention to what journalists write when oftentimes the journalists are getting information often from actually people, let's say on Tesla for sure. Maybe you disagree, but I feel like they represent the short side
Yeah, for sure.
big time. I mean,
Yeah.
and then they depend on analysts who are
Yeah.
deeply conflicted. Because if you think about this, and most people wouldn't know this, but listen, the car companies, Ian, whether it be GM, Ford, I mean, they always are selling debt. So they rely on Wall Street to sell that debt. And so, of course, they have a point of view, and somebody coming to eviscerate all that business is not a friend. They're an enemy.
No, exactly. Yeah. So another thing that I heard yesterday was that there were 17 sell ratings on Tesla from analysts for that earnings call. So now that's 17 people that look really stupid, as if they didn't already look stupid from the past 6, 7 months, as the stock is like almost quadrupled actually from the low.
And go back to Ian. Do you remember the Iancast where like somebody like cut their price, no, downgraded the stock. It was like it was like
Yeah.
2 months ago.
Oh, to 40. I think it was in like June or July. Yeah, they said it was going to be $40 a share. And I think there was one that said 0 or something too.
Well, 40 essentially is a zero.
Yeah, it's bankrupt. Yeah.
That's what, I think I was on that Iancast and I was like, they're essentially telling you that this company is going to zero.
Yeah.
And there are a lot of people at 178, which was like the low in 2019, were happy to come out and tell you. And people tell you, oh, the shorts have made all this money. However, for me, Ian, it does come back. It's like I drive a Tesla. I've actually got my key fob right here. And
Yeah.
this is like actually really cool. But anyone that actually drives one, it's like, this is a great car. I
Right.
mean, okay, folks that love, the rumble of a gasoline engine, I get it. I mean, some people love different feel, but people who want a different ride with no resistance, you just hit that pedal. It's a great product, which is what I would always come back to, which is like, if you drive this, you can easily see that there are a lot of people that would want to buy it. And if they
Yeah.
get that cost down to that $35,000 mark consistently and below, which you can see the economics of it. And ARK Invest really shows you, I forget the law that they cite, for the cost decline that they're expecting, which is about the cost of batteries really going into steep decline, which is
Yeah.
they should be able to get this down there.
I think they said 2025 they expect these cars to be like just $17,000 to $20,000.
Right.
Whereas, I mean, for even a basic normal combustion engine car like a sedan, you're going to still be spending over $20,000 new, and the electric vehicles are just going to keep going lower.
And that's the difference between an old technology that's already gone through its sort of economies of scale point of time versus a new technology that is starting here in cost. And then
Yeah.
as you put scale in, it actually the cost declines. And so EVs are on that cost curve down where it's going to cost less and less. And ICE manufacturers, well, there's nothing much more that they can do. They're looking to lift price for every improvement, and EVs sit on the other side. And we
Yep.
should, Ian, just discuss like the big, people like, well, they're not making any money. And this is another trope that I
Yeah.
truthfully, I never understand. Is like, it's a company that obviously needs money to grow. And they can either get it from equity investors, or they can get it from debt investors, or they can get it from a bank, or they can get it from subsidies from government. That's how every business pretty much of that kind of scale that has like economy-wide impact, that's how they grow. So of course, in their early days when they're spending, they are not going to be profitable. They are investing in scale, investing in plant,
Right.
investing additionally to both to make the manufacturing process more efficient, make the car better. I actually just totally don't understand what people are talking about.
I know. Yeah. Like there have been at least two occasions where they've raised debt. So people actually bought bonds on Tesla, like billions of dollars worth of bonds. So the money out there is clearly willing to invest in Tesla, put money into debt in Tesla, because they know that the business is going to end up being fine because they see the demand for the cars. You'd never know that demand was out there for the bonds if you just listen to what they said on Wall Street.
Yeah, but it really does come back to this, and it does remind me a great deal of sort of like in 1999, in Apple, was almost near bankruptcy. It was 1998, and Steve Jobs came back, and I remember a lot of people were incredibly skeptical, and going through that experience sort of like really strengthened me for understanding that if there is demand for the end product, there's enough smart investors in the world that will come and fund the company.
Yeah,
That was
exactly.
true in 1998, which is that Apple was a beloved brand. Even 1998, people loved their computers. People loved their sense of design, that
Right.
ease of using, and so there were enough people that saw that end demand. They were willing to fund the company as an investment, whether they were a user or not. They could see that there was end demand. And
Yeah,
that's really the ultimate story,
exactly.
the ultimate
And,
story. All
that's
right,
why
I think,
Tesla was spending. Yeah, one last thing. That's why Tesla was spending so much money, because they were busy building this gigantic factory in China, and they built a second one in America. And now they're building one in Europe. That cost a lot of money, but it's going
that's
to pay
right.
off because people are buying the cars faster than they can make them, and
Well, I
so
mean,
it's definitely going to pay off.
they did a huge convertible bond offering. I believe it was 2, 3 years ago, and there was like a lot of things like, oh, all that debt. Well, they needed that to put up the Gigafactory, which is
Yeah,
now
right.
producing the Model
Exactly.
3s. I mean, you have to come up with the capital ahead of making the cars.
Yeah.
So, I mean, scale businesses require that you have either equity, debt, loans, some form of government funding. You have to put up that plant, and only then can you make the money. So, seems
Yep.
pretty simple to me.
They did it in record time too. I think it hasn't even been a year yet since they broke ground in China, and they're already making the cars there and delivering them.
Yeah, that we have. I have gone on record saying I believe that Tesla could be a $1,000 stock by year end. We're well on our way at this point, and that
Yeah.
is driven on projections of free cash flow. That as they introduce Model Y, semi truck, Cybertruck, actually the cost keeps declining of producing it, and so their margins will now start to really get to that 20-30% range on a very big number.
Right.
A very
Exactly.
big number. All right, Ian, I think we've done Tesla.
Yeah.
A lot of stuff on Bitcoin too. Yeah, I've sent you this article is in the mainstream press. It was actually from Vanity Fair.
Yeah,
And this, I don't know if you saw that. Did you read that?
yeah, I did.
Yeah.
I did.
And so it cited a really well-known Bitcoin investor. I don't know. I can't remember the guy's name. His first name was Tim. I was talking about the first two halvenings
Right.
and what happened. And, and in the last one, it essentially went from kind of like almost like double digits. It was like 70 to 1,000.
Yeah.
Right. So this is now slowly beginning to sort of get traction as an idea, though there's no real sign that there's any excitement. I don't know if you're seeing something different.
Yeah, not really. I've seen a little bit just here and there, like people on Twitter that are traders are starting to turn bullish. They've been bearish really for the past 4 or 5 months overall, I'd say. But now I'm starting to see some people say that Bitcoin from here is going to move up. We've been saying this for a while, $50,000 this year, but there's probably going to be a rally into that halvening because, like we've said before, it cuts down the supply so much that people are going to be willing to pay for more of them. And people are holding on to Bitcoin like never before too. Like I showed that chart last week, the number of Bitcoin addresses with one or more coins in them has just gone straight up pretty much since the coin was even created, since addresses have been adding up. So there's so much demand. People are holding this. So there's less supply for that reason. And there's less future supply. There's going to be less Bitcoin mined in the future as well. So all in all, it's like a perfect storm for Bitcoin to go up a lot this year and especially next year too.
I'm just laying it out. So, I mean, right now, if you're a Bitcoin miner, I forget the actual term. It's like you would generate 12 and a half Bitcoin is the rate that do it. And that's going to be halved, which is the halvening to 6 1/4.
Yeah.
Right? Yeah, to 6 1/4. So that's a huge decline in the supply of Bitcoin, of potential, of supply that can come into there. And if what has been happening, certainly among enough people that understand the effect of Bitcoin and that believe in Bitcoin in the proven scarceability. I remember sending you that, like I forget the dude on Twitter that laid that out, and that's what Bitcoin has. People say, well, Paul, what's the intrinsic value of Bitcoin?
Yeah.
Well, I mean, what's the intrinsic value of gold, Ian? I mean,
exactly.
What is
rock.
the
There's a
intrinsic
lot of
value
rare
of a diamond? Nothing. They have the same thing that Bitcoin does, which is it has proven scarceability. In fact, it is the only asset other than other cryptos that have that.
Yep.
Exactly. Actual finiteness.
Yep.
Yeah. And
that's what gives it such.
What's
that's
that?
what gives it the potential to go up so much, because it's kind of like number one, people realize the value of it because they see other people valuing it high. Number two, there's always the higher demand at higher prices, which we've talked about before. So like when Bitcoin was at 3,000 in like early 2019, nobody really wanted it because it had gone down so much. There was bad sentiment. Everybody was kind of bearish, but some people were still buying. Not huge demand, but then when it started going up in April and May, and it hit like 7,000 or 8,000, from there it just went up in like a straight line to 14,000. So the demand actually goes up with the price, and that's what we're starting to see now, and that's why it's going to rally, I think, before that happening in May.
Yeah, I mean, we're on board, and actually, just I think it was on Wednesday at noon, Profits Unlimited. We put in our first crypto trade ever, and so if you're interested in that, just click on the strong hands above, and that will get you to a page where you can get in on our first crypto trade by being part of the Profits Unlimited, we call it Strong Hands family, and where we laid out the entire case for Bitcoin, the halvening, and also something that is part of something that we've talked about, America 2.0, and the rise of really Ian's generation, the millennial generation, 93 million strong. Ian's making a ton of money. Millennials are rising. Their wages are rising faster than almost any other generation, which is why they're buying houses, starting families, buying Teslas. And they're the folks that really are hodling Bitcoin.
Yeah, yeah, for sure. It's one of the most popular investments for millennials, like on Robinhood, even in 401ks. People are putting money into these Bitcoin investments in the stock market, and it's mostly millennials and Gen Z. As they start to enter the workforce, as they set up retirement accounts and put their money in the market, they're going to be buying it too. So, it's a huge generational wave of demand that's about to hit this too. And that's going to last for years. As people, continue to make more money, they're going to have more to invest. And Bitcoin is definitely up there in terms of what millennials want to invest in.
And then you've seen that meme that's out there on dump gold, right? For Bitcoin.
Right. Yeah.
I think
Yep.
is it Grayscale?
Yeah.
Yeah. So Grayscale is the largest crypto digital asset manager in the world. They manage, I don't know, is it 3 billion? It's a lot of money now at this point.
Billions. Yeah.
It's
Yep.
in the billions of dollars. And they are really by one of the leading really crypto, Bitcoin, digital asset sort of promoters. I don't know, they talk about the idea. They have white papers on there. Go on their website. They have all kinds of interesting data. However, to Ian and I, really, you know, Bitcoin is acting like people's like, well, Paul, one of the objections, Ian, is that, oh, Bitcoin's not being used in daily transactions. And for the two of us, they're like, well, that's not the point of it.
No, neither is gold. I mean, people don't carry a brick of gold to the store to buy stuff. So, yeah.
I carry like I'm just going to show my book just to promote it that,
Yeah.
hey, this is available on Amazon, but, I'm not carrying,
Yeah.
like this size gold and going to want to shave something off.
Right.
Yeah,
Yeah.
I mean, who would do that? So Bitcoin is pretty clear that its market is really the market for storing value, especially in foreign countries, and that have no alternatives, which we lay out in actually our Profits Unlimited issue, which is that if you're in places like, for example, India,
Mhm.
you would not leave your money in Indian rupees. You can't even look at how bad the inflation has been over the lifetime of that currency. It's better than some others in the sense that at least it hasn't gone away and wiped you out. But inflation has wiped out people that save in rupees multiple
Yeah.
times.
That's most currencies all over the world. And I just saw actually the Turkish lira, the government of Turkey allowed that the lira to be exchanged for Bitcoin on this one website. That's a pretty big deal for me, at least in my opinion, because that's a country that's gone through some pretty serious stuff recently. Their currency has plummeted, and there would be a lot of demand in an area like that for Bitcoin too, because even if Bitcoin is volatile, it's still a lot more stable than most of these other currencies. And over time, people can see it's gone up. So it's a store of value, but people also can benefit from it if the price continues to go up, which we believe it will. And like we pointed out before, even in the worst situations, like when it fell from 20,000 to 3,000, people that were holding it in Argentina, which is a lot of people, still ended up losing less money in Bitcoin than they would have if they just held their own currency. And that goes for a few of those currencies in the world too, which are in really rough shape. They just have these crazy high inflation, and Bitcoin is kind of a safe haven from that.
That's right. And you can take Bitcoin and just put it on, as opposed to a gold bar or something like that, where
Yeah,
you'd have to make some deal with a Swiss banker and show up in
right.
Switzerland. You just put it on, a USB, stick it into your
Yeah,
pocket, and go, and you've got something. And as long as you can go and put this bag into a computer, extract that value, it's modern. I put out a whole series of tweets, Ian. I don't know if you saw it, but Bitcoin is more divisible than gold. It's
yep,
more portable than gold. It's more finite than gold. So I believe that gold over time is going to lose massive market share from the store of value, and Bitcoin is going to capture all of that. And then there's, the vast majority of the world's currencies, which truthfully should not exist. And
yeah.
Bitcoin will get their market cap as well.
Yeah, I mean, gold is 10 trillion about in market cap. Bitcoin is like 160, 170 billion. So even if they split 5 trillion each, that's like still $300,000 per Bitcoin.
Right. And we think that Ian and I believe that, into the halvening, we're going to see a new high for Bitcoin. That's kind of like the mental map we've laid out. We think, I don't know, somewhere 20, 25,000, probably 30,000. And we have looked at previous halvenings. There's a sort of buy the rumor, sell on the news effect that happens, which we expect again. And
Right.
then the big rally really begins.
Yeah.
Yeah.
For like a year and a half plus. I mean,
Right.
the last halving was in 2016, but 2017 was the year of the big rally.
That's
So,
right. So, I
yeah.
mean, it will definitely push some people out, but we would tell you, it's going to be worth holding, because then really the impact of that supply crunch really is affected in the year and a half that comes after. So,
Yep.
Once again, if you're interested in Bitcoin, we do it through a stock, so that you don't actually have to deal with a crypto account. Click on the strong hands above. That will take you to a page that will get you to a subscription page on Profits Unlimited. Tell you actually a little bit on America 2.0, which is Ian's generation. It's their time, and talks about really how we're going to be remaking this country, partly through crypto, fintech, all these mega trends, including another one, which is really the vice economy, which is also being reshaped by your generation, Ian,
Yep.
which
Yeah.
is cannabis is at the heart of it. We've
Yep.
talked quite a bit about cannabis. I don't know if we have a lot more new to say this week on this.
No, not too much. But speaking of taking market share, cannabis is taking market share from what we call the old vice economy, which is tobacco and alcohol, which is a $2 trillion market. So there's a lot of room for growth there too. And we're seeing, obviously, more states are starting to legalize. New Hampshire just legalized recreational. New York and New Jersey, which have tens of millions of people in them, are really trying to push legislation to legalize it as well. This year, especially, they're really dead set on doing that. So that would be another big addition to this market. But just on a global scale, we can see it starting to take away that market share from the old world kind of vice economy.
And if you're interested in our cannabis picks, which are in Ian's $10 million portfolio, I'm along with him. And then we also have some in profit. We have one in Profits Unlimited, which is my flagship service. And I believe we also have one in our small cap service, which is called Extreme Fortunes. And you can go to Paul Mampilly Guru and you'll see all of our services listed. So if you want to check into any of those, check into that. All right, Ian, we've done Tesla, we've done Bitcoin, we've done cannabis. General market comments before we end this Iancast.
Yeah. So of course the market's gotten off to a hot start. One of the things that I've noticed is housing. These housing stocks have gone up like crazy. I've tweeted about it a couple times. 2019 was a record year for new home sales. It was the highest year since the big real estate crash. 694,000 new homes were sold that year, which is 12% higher than the total amount of sales in 2018. So it was a big year for that. Again, driven by millennials, who are the majority buyers of these new homes. So for that, I would recommend buying ITB. It's an ETF with a bunch of different housing stocks in it. I think that's going to have a great year this year.
And I've been recommending ITB really since 2016, based on the same premise for some period of time. So ITB, that's a freebie for you, for all of you. You want to get in on the millennial housing trade, ITB. And before I end, I just want to say, if you like the Iancast, please subscribe to the channel, give us a thumbs up, comment below. Are you going to get in on the halvening and Bitcoin? Let us know if you're in. Also, any comments that you have on Tesla, if you got in on it, you made money. And I believe with that, I just want to also finally say, just like Ian, we're positive, we're optimistic, we're bullish because of all of the mega trends, because of really the cumulative effect of what is going on. So if you're in any of our services, stay in our stocks. There's a lot of people trying to tell you about bad things, crashes, crises. There's really no sign of a recession, none of that out there. So be strong hands, keep holding our stocks. There will always be volatility. I believe there's a lot more upside to go. All right, Ian, I believe we've done this for the Iancast.
All right. Awesome. Thanks for coming on. And everybody, I hope you have a great Friday, great weekend, and I will see you next week.
Bye.